There we go. I forgot I did some sound changes up in my background and stuff to make sure that I got this appropriate for today. So what's up, folks? It's your boy MMG Smurf here, coming to you live. And today we're going to be talking about macroeconomics. We're actually going to be doing a reaction series. And so hopefully this will become a whole reaction series to different economic situations, crypto projects and events and news, etc. But I kind of want to do that and wrap it into a spaces type setting, so a Twitter spaces setting. So you'll notice the title of this is Coffee and Crypto Spaces, and the spaces is in reference to Twitter spaces. So we have not yet started the Twitter spaces, but we are live on Twitter right now as well. I'll be looking at our live stream chats and taking questions from the live stream chats if any of those come in. I will also be doing a talk back in the Twitter spaces and taking people's actual questions that way too, so vocally, audio. That said, though, I am going to head over to my screen here and let's do the fun new MMG transition, shall we? Boom. And yeah, we're ready. So it says coffee and crypto. I left out spaces over here because this is Twitter spaces. Macroeconomics. You could just call it econ, but whatever. React and talk back. What's Smurf? So without any further ado, let's push this. Let's start this. And again, we're going to be reacting to a few videos today. I want to invite. No, I'm not going to invite anybody because, we'll just see if anybody ever actually shows up or not. Share with a tweet. Sure. Let's type something out. SS crypto, econ, hashtag macro, hashtag NFTs, and hopefully I'm in my own space. Okay, yeah. I was like, I don't see my own space started up. All right. So let me make sure that my voice isn't echoing through, coming back to me. Cool. Seems good. And yeah, I'm not expecting us to necessarily have a bunch of people, and this is my first spaces that we're doing. This is the way that I'm going to be doing these moving forward, I think. Yeah, so that's enough of that intro. How are we going to be doing this thing? Today we're going to be reacting to a few different types of videos. We're going to be reacting to the latest Warren Buffett speech or talk back to his community. I think it was just like more, well, it's kind of a talk back. But we got 3 clips from that. One, Warren Buffett, and these are all talking about Bitcoin, cryptocurrency mostly. But they do give a little insight as well. I'm not going to watch the entire thing. Also, we're going to be watching all these videos in 2x speed today. That's my hack, my life hack or whatever with crypto videos or just any informational videos on YouTube that I don't need to slow down to learn it the very first time. So we're going to be listening to all this in 2x speed. If you need me to go back, feel free to raise your hand, ask questions in chat, have me pause it, etc. But we got 3 of those videos queued up from Warren Buffett, and I forget what their little trip to Mecca thing is called, whatever the heck. I know everybody in crypto loves to call it the trip to Mecca. Then we'll be listening to Raul Paul on global recession. And after that, we will be doing a Tom Bellew video. I don't know if I'm saying your name right. I feel like it's Tom Blue or something. And he has a video with Ray Dalio, who is one of America's most prolific investors. And they will be talking about people don't know what's coming, prepare for the changing world order. He's been saying things like this for the last few months or so. Also, I didn't give him very much background into Raul Paul other than, I just said Ray Dalio is a prolific investor. Raul Paul is also a great investor, and he was a hedge fund manager for quite a few years. I forget what his current role is, but a good person to get some insight from as far as those type of things go. All right. So that said, we're going to start off with this Warren Buffett information. Let's roll the clips. And don't worry, I do have the video for you guys too.
Hello, Warren and Charlie. It is great to see you both.
Oop, a little slow up there.
And the wonderful Berkshire managers. Our thanks for everything that you do. My name is Rajiv Agarwal, and I am from New Jersey. My question is on market timing. You have always said that it is impossible to time the markets. Yet, if we look at your track record, you have had amazing timings with some of your key decisions. You got out of the stock markets in 1969-70. You got back in 72, 72, 74 when the markets were really cheap. You did the same thing in 87, 99, 2000. And today, we are sitting on a significant amount of cash when the markets are going down. My question is, how do you time the big market moves so well?
We'd like to offer you a job first.
I will take it.
The interesting thing is, obviously, we have the faintest idea what the stock market is going to do when it opens on Monday. We never have had. We have never made, Charlie and I don't think, and all the time we work together, and I'll tell you something later on maybe about how learning takes place, but we have never, I don't think we've ever made a decision where either one of us has either said or been thinking we should buy or sell based on what the market's going to do.
No.
Or for that matter, on what the economy's going to do. We don't know. And the interesting thing is, sometimes I get some credit someplace for the fact that, how wonderful it was that we were optimistic in 2008 and when everybody was down on stocks and all that sort of thing. We spent a big percentage of our net worth at a very dumb time. And I shouldn't say we, it's I. We spent about $15 or $16 billion, which was a lot bigger to us then than it is now. We spent it in the last few weeks, a period of 3 or 4 weeks, between Wrigley and Goldman Sachs and General. We had a terrible time, as it turned out. I mean, I didn't know it was going to be a good time or a bad time, but it was a really dumb time. And I wrote an article for the New York Times and Buy American and all these things. Well, if I'd had any sense of timing and waited 6 months until, the low was in March, and in fact, I think I was on CNBC maybe that day or something, but I totally missed that opportunity. I totally missed, in March of 2020. We have not been good at timing. We've been reasonably good at figuring out when we were getting enough for our money. And we had no idea when we bought anything. Well, we always hoped it would go down for a while so we could buy more. And we hoped even after we were done buying and ran out of money that if it was cheap, the company would keep buying and in fact taking our interest out. I mean, that's stuff you can learn it in 4th grade. But that's not what's taught in school. And, so never give us any credit. Well, actually give us all the credit. Go out and tell everybody how smart we are, but we aren't. We haven't ever timed anything. We've never figured out insights into the economy. When I was March 12th, I guess, 1942, at March 11th, I bought stock when the Dow was 90. Well, it was 101 in the morning. It was 99 at the end of the day, I think. And now it's 34,000, or maybe it's 1,000 less than it was on Thursday. But I just, it's one decision. Well,
so
I shouldn't answer any questions on the subject, but I will. There's all kinds of people.
This clip right here is in reference to Bitcoin. So I think somebody asked him about Bitcoin, and Warren's going to give his opinion on that.
See this? They're long Bitcoin, and there's nobody that's short, and nobody wants their windpipe stepped on. I don't blame them. I don't like people step on my windpipe. But I would say this: that if the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, and you said for 1%.
So I did listen to this clip, and so before he goes all the way into this, I'm going to break this down for you. The first way that he gives this as an analogy is that if everybody in the room, so there's probably 100,000 people in the room, there's a large amount of people in the room. It's not just going to be 20 people in the room. So, but if everybody in the room owned a percentage of the farmland, and later on he says apartment housing in America, so that's broken up between a bunch of different people, over 100 people, and then he's going to buy a percentage from all those people. And then listen how he has to switch his analogy to try to diss Bitcoin. And I'm going to pause it at that point too, and we'll see if this makes any sense.
Interest in all the farmland in the United States. Pay our group. Let's see. It's this bargain price, $25 billion. I'll write you a check this afternoon. $25 billion. Now I own 1% of the farmland. If you tell me you own 1% of the apartment houses in the United States, and you offer me a 1% interest, so I'll have 1% in all the apartment houses in the country, and you want whatever it may be for it, call it another $25 billion or something. I'll write you a check. It's very simple. Now, if you told me you owned all of the Bitcoin in the world, and you offered it to me for $25.
So there is, I think, the biggest difference of what he just did. So previously, his example was everybody in the room owns a percentage of this stuff, and he's writing a check for 1%. He wants 1% from what everybody else holds. Listen how he switches this up, though.
For it. Call it another $25 billion or something. I'll write you a check. It's very simple. Now, if you told me you owned all of the Bitcoin in the world, and you offered it to me for $25, I wouldn't take it because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything. The apartments are going.
So here's the thing. I'm like, are you like, so he's asking for, and this is the way that it's been written in the media time and time again since this came out, is that now all of a sudden the entire room, I guess, has Bitcoin, maybe. And then he's buying up all of the Bitcoin, not 1% anymore like he would with housing or the farmland. He's buying up 100% of all the Bitcoin, and he's going as low as $25. So obviously he's doing that to like insult it already, because he was saying billions of dollars before. But he gets it all for $25 here, 100%. And he goes, what is this? Let's see. See this.
I wouldn't take it because what would I do with it?
I wouldn't take it because what would I do with it? Well, Warren, like, you're supposed to be a very smart man. In how many situations would people actually agree to a deal like this and still have value, perceived value behind the product or currency, whatever have you, that was just bought up and monopolized? People probably don't want it. Like, and as Bitcoin, like he definitely sounds like a non-Bitcoiner here. So I just want to harp on this for just a second, because he doesn't sound like a Bitcoiner, like he actually understands the value of it or anything like that. Any Bitcoiner, if we found out, and like, I consider myself somewhat of a Bitcoiner, you know what I'm saying? I'm not like, oh, I'm gung ho Bitcoin, but I like the idea of Bitcoin. And one of the ideas that behind Bitcoin is that it's decentralized. Bitcoin would not be decentralized if a small fraction of people, or one person, but definitely not if one person, had 100% of all the Bitcoin. And so, Warren, by your own definition, yes, if you owned 100% of all the Bitcoin, you're screwed. Nobody is going to perceive value in Bitcoin, and the next closest competitor is going to take off because you just misunderstood the whole value of Bitcoin by doing that. Nobody wants it to be centralized. You sound like a boomer saying this type of stuff, and you're one of America's best investors, by seeing things with value, but you're totally missing the boat on this. And like your idea of like, oh, monopoly must be like, I don't understand how he was able to switch up in this one situation. Why wouldn't you do the exact same thing that you did with the real estate portion or the farmland portion? Both we said to be real estate. Stuck to real estate, but why wouldn't you keep it 1%? Why wouldn't you keep it 1%? Because if you would be like, and then I own 1% of all Bitcoin, that'd still be like, I don't know, but it would be more decentralized than you owning 100% of it. Like, you just took all the value away. And yeah, you're going to struggle to find anybody who wants to buy that Bitcoin back off of you, because you totally determine the market value of that Bitcoin now. Instead of the entire world determining the market value of that Bitcoin, you determine the market value of that Bitcoin. It's no longer what people wanted it to be if that was able to happen. And so hopefully they do take some time at some portion during the rest of their life and figure that out. Because right now what you're saying is pretty stupid. It doesn't really make sense. And like, it's crazy to call Warren Buffett stupid, but like, that doesn't make sense, bro. It doesn't. So like, hopefully you come to understand that at some portion of time. And maybe you misspoke here or meant something else, but to anybody in the cryptocurrency or Bitcoin, like that sounds dumb. That's what we call like a potential for a rug pull. Like, nobody wants that situation in even the slightest altcoin market. That's a horrible situation to be in. So what he just named out right now is actually more of an advertisement for Bitcoin, because it is nothing like that for people that actually know, except for everybody in this room that's, probably listening, probably doesn't know that. And so for them, sure. But for anybody else who's actually educated on the matter, you just advertised for it and you don't know what you're talking about, which is somewhat sad because you apparently do a lot of reading and you're not reading the right stuff still.
I have to sell it back to you one way or another. I mean,
maybe more peanut brittle, because everybody likes that peanut brittle. Advertise that some more.
Hey, people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was 15 years ago. If I got it all, he could create a mystery about it. But everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well, why should I buy some Bitcoin from you? Why don't you call it buffer coin? Make your own or something. Do something. But I'm not going to give you anything for it. And you'd be right, incidentally. But that explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got. Now, net, if you look at it, a lot of commissions have been paid, and there's all kinds of frictional costs is paid to a bunch of people who facilitate this game. But whatever one group of the public has taken out, or one group of owners, that's coming from other people. I mean, it's other people have entered the room and they move, but there's no more money in the room. It just changed hands with a lot of maybe fraud and costs involved, and a whole bunch of things you lose. You forget the numbers or forget the equation. You can do that with a lot of things. I mean, it's been done throughout history. Certain things have value that don't produce something tangible. I mean, you can say a great painting probably will have some value, 500 years from now. May not, but
I'm gonna rewind back to this portion right here. This is also a portion I think I just kind of went through like why I feel like Warren Buffett's not quite getting it, but this portion right here too, honestly.
Throughout history, certain owners has come in from other people. I mean, other people have entered the room, and
Right.
there's all kinds of frictional costs that are very real that somebody has paid to a bunch of people to facilitate this game. But whenever one group of the public is taken out, or one group of owners has come in from other people. I mean, other people have entered the room and they move money around, but no money had.
So there's one portion, which is that he's talking about if people can move money around. But in your analogy, you owned 100% of all the Bitcoin. It's no longer like you didn't own 100% of all the real estate in America. You didn't own 100% of all the farmland in America in your analogies. But in your analogies, you own 100% of all the Bitcoin. And so there's nobody to interchange it with unless they just want to go. You'd have a hard time selling that farmland or apartment complex as well if you monopolize the entire industry and you owned 100% of it and you needed somebody to buy it from you. It's going to be a really hard sell, Warren. People are going to start leaving the country because it's monopolized. You monopolize the entire country. Nobody wants that. It's not a democracy any longer, Warren. We're currently already fighting that, and people are already talking about those type of things. So why would you have that like as an analogy? Like you intentionally made it 1% when you were bringing it up initially, and now it's 100% when it's Bitcoin though. It seems like you're lobbying more so than just trying to explain something. But keep going.
There's no more money in the room. It just changed hands with a lot of maybe fraud and costs involved, and a whole bunch of things you lose. If you forget the numbers or forget the equation. And you can do that with a lot of things. I mean, it's been done throughout history. Certain things have value that don't produce something tangible. I mean, you can say a great painting, probably will have some value 500 years from now. May not, but the odds are pretty good that if it was a big enough name at some point. But there will be a few things. I mean, you can find something great. If somebody wants to sell you a pyramid or something, and you can charge the viewers, or it'll be around a long time and won't produce anything. But people will find it interesting to go there because they're better with the pyramids. But basically, assets to have value, they have to deliver something to somebody, and
so assets have value if they deliver something to somebody. His own words.
There's only one currency that's acceptable in the United States.
But there's only one currency that's acceptable.
I mean, you can come up with all kinds of things to somebody, and there's only one currency that's acceptable in the United States. I mean, you can.
So part of his reasoning is this: there's only one currency that's acceptable, and that's the United States. And if we went back to, I suggest anybody, you can check out the cryptocurrency, it's Crypto Investing 101, the Fundamentals and Concepts series that I'm starting on YouTube. We have a long version of it right now. I'm going to be releasing a shorter clip of the first portion of that later on today. But we cover kind of how a lot of the world was tricked into the United States dollar being the only dollar that's used as the reserve currency of the world. And actually, it's not even the only reserve currency of the world right now. What Warren Buffett's saying is actually false. Because if you're reading the articles, and we mentioned this on Sean Porter just joined us, mentioned this on the Fight Legends podcast before, that like currently the amount of United States dollars being held by countries as the reserve currency is diminishing. It used to be like 70-80% or so, and now it's around 65%, and they're stacking up on other currencies as well. So that's already diminishing. It's just not true. You're giving an American opinion, and to his point earlier that Warren made, that this is stuff that you could learn in 4th grade, but they don't teach it in school. Well, yeah, exactly. And the same thing that he's kind of reaping on right now, which is like, oh, the United States dollar is the only currency that's accepted. That's not true. That's not true, and it's diminishing. And if one of our best investors, would help educate people toward that as well, they'd probably do that much better off. We'd probably fare much better on an international stage. But if you're going to keep saying stuff like this, then we'll see where we end up.
We come up with all kinds of things. We can put up Berkshire coins, or we can put up Berkshire money or anything like that. But we get in trouble, I guess, if we call it money. But in the end, this is money, and there's no reason in the world why the United States government, whose currency people prefer, literally there's just under 2.3 trillion just of these little pieces.
Currency people prefer. They don't necessarily prefer it. They honestly got tricked into it. People preferred gold. They thought that they could take the United States dollar, transfer it for a certain amount of gold. And then eventually a United States president came along and said, we will not give you gold any longer. Yes, we have the biggest gold reserves, and we will not give you any more gold for the United States dollars. After we pushed out the United States dollar to the rest of the world. That's not true what you're saying, bruh. People expected to get gold back, and if they can get some type of digital gold back for dollars instead, anything that's actually a tangible asset that's not regulated by man-made inflation, they're probably going to do something like that.
Pieces of paper floating around someplace. So 7,000 for every man, woman, and child in the United States. And most of them probably aren't in the United States. Who knows? But this is the only thing that's money. And anybody that thinks the United States is going to change the way they let Berkshire money replace theirs, it's out of their mind. I mean, so anyway, with those few deficiencies, you can, whether it goes up or down the next year or 5 years, 10 years, I don't know. But the one thing I'm pretty sure of is that it doesn't multiply, doesn't produce anything. It's got magic to it, and people have attached magic to lots of things. The gold in Wall Street, free magic. We are not an insurance company. We're a tech company. Well, they're an insurance company, but a dozen people are sold, raise a lot of money. They just say, just don't pay any attention to the fact that we sell insurance. We are a tech company.
Okay, hold up. Sean said lots of crackling in the audio of the spaces. Let me record it for a second. Listen to this. This is our first spaces like this, so let me make sure.
In the end, they wrote insurance, and overwhelmingly, they've lost a lot of money since then. You can make up things that work well and
sound before
getting money from other people.
No issues, so
that's why.
Interesting. All right, that was the end of Warren's speech there, so I'm going to pause this next one. And we're going to listen to the recording that I just made and see what's up with the sound. So give me just a moment. I'm actually going to put it on the wait screen while I'll listen to that. All right, so I was informed that there's like crackling or whatever in the audio, which is interesting new noise to me. Partially just because like I tested the sound beforehand and we didn't get any issues with the sound then. And so I do wonder if it was theirs. I'm going to listen to it. I'm going to pause myself during the next portion of things and listen to it on my other stream and see if I hear what Sean was just talking about, because we do want to be able to fix the audio situation to make sure that we have the most pristine audio coming through. Hopefully I can do that during this next video if that is an issue. And Bitcoin, this video is titled "Bitcoin is Stupid because it's very likely to go to zero," says Charlie Munger.
Well, I have a slightly different way of looking at it.
I'll sell you something.
Well, in my life, I try and avoid things that are stupid and evil and make me look bad in comparison with somebody else. And Bitcoin does all three. and the first place, it's stupid because it's very likely to go to zero. The second place, it's evil because it undermines the Federal Reserve System and the national currency system, which we desperately need to maintain its integrity and government control and so on. And third, it makes us look foolish compared to the communist leader in China. He was smart enough to ban Bitcoin in China. And with all of our presumed advantages of civilization, we are a lot dumber than the communist leader in China.
Yeah, and when 25% of the people of the country get mad because we've said what we said today, just remember Charlie spoke last. It was the most... The one development that I really do think is actually important, I don't know anybody do anything about it, but my general sense, and there's no way to prove it, but I essentially believe people are now behaving somewhat more tribal than they have for a long time. And I mean, people are always going to be partisan, and they're going to have religious, they're going to have all kinds of things, but it gets pretty tribal. And I want to tell you, I speak from experience because I've been tribal. And we're confessing today. Nebraska football is tribal. And when I watch a television set and I see our guy Nebraska step out of bounds by a foot, but somehow the ref misses it and calls it in, and then they show 6 replays, I'll continue to believe it was in, even though it's right in front of my eyes. Stepped out. That's tribal behavior. And it's fun. I mean, participate in. But I guess it can get very dangerous when one group of people say 2 + 2 is 5, another says 2 + 2 is 3, and they're going to give you those answers if you follow them. And the interesting thing is, to me, at least, partly because of my age, but I actually think that, just from memory, that the last time that the country was seen as tribal was actually when I was a kid and Roosevelt was in. Either you hated Roosevelt or you loved him. I mean, nobody cared about the fact Alf Landon was running or Wendell Willkie was running against him. They just had these feelings. They either had Roosevelt's picture on the wall and named their kids after Roosevelt, or they hated him. And they thought he was going to, no third term, and a million things. And the country was very, very tribal in the 30s, but Roosevelt's tribe was bigger. And in my opinion, they did some wonderful things, but I happened to grow up in a household where we didn't get served dessert until we said something nasty about Roosevelt. I mean, and believe me, if you don't get dessert, you're going to say something nasty about Roosevelt. And so you train them young and all kinds of things. And so I think I've seen a period that it wasn't that way when, if Eisenhower was running against Stevenson or whatever it might be. I mean, people, they had a partisan behavior and they had a certain amount of tribal always, but I don't think it's a good development for society generally when people get tribal, regardless. I mean,
All right. So I'm going to pause this at the start of this raw pause video. I'm going to join via my phone here, via another social media account on Twitter, and see if I can't hear this issue that Sean was bringing to my attention, Sean Porter from Fight Legends. So before we jump into this next one, and yeah, sorry if you expected like this to be super smooth today. This is my first time doing this, and if anything, I want to take the first take at things to try and fix as much as possible. But I'm not hearing anything on the streaming end, so if you are hearing crackling or whatnot and you're jumping into the spaces, it's like I'm talking to nobody right now, but if you are jumping in, feel free to jump into the live stream, which is also premiering on Twitter, and the audio sounds just fine over there, from what I've heard, at least. So, in this Raw Paul video, this is titled Raw Paul on Global Recession, What to Know. This was from April 28th. Again, we're listening at 2x speed.
Are we going to have a recession? Is inflation going to infinity? Stagflation? There's so many voices out there saying so many things, but how do you figure out the good takes from the bad? What happens if everybody's wrong? Here's my take. I think that economic growth is going to fall sharply at the second half of the year, sharper than people expect. And maybe that changes the equation for the Fed. I think inflation's going to ease off quite sharply too. But I've been in markets long enough to know that we all get it completely wrong sometimes, and I could be dead wrong. That's the power of Real Vision. It's that we host amazing conversations with some of the world's greatest analysts and investors, so that our members have the information and analysis to inform their own thinking. Over the last weeks, we published some incredible conversations about what's ahead and how to invest against it. In this video, we've distilled several of them to their key takeaways to get you up to speed quickly. There's a lot going on. So I just wanted to pick your brains, see how you're seeing the world. So give us your big picture view, and then we'll start digging into some stuff as we start chatting.
So I think kind of like how COVID-19 accelerated a lot of trends that were probably already going to be in place anyway, I think the recent military conflicts we're seeing are kind of accelerating some of the problems that were already mounting. And so, for example, we already saw Europe have some energy issues even before any of this conflict broke out, and some of that was now accelerated. I think same thing for food insecurity and things like that. And essentially, I think what we're seeing is a slow kind of unwind of the global monetary order that's been around for the past 50 years or so, and moving towards a more bifurcated world where we have maybe a little bit more decentralized payment channels, maybe more decentralized choices of storing value, as well as supply chains themselves becoming more bifurcated because we're seeing food protectionism, commodity protectionism, All
right, so I'm gonna pause Lynn really quickly. Partially because, I am hearing it on the spaces. The spaces is coming through a little bit differently. The audio is coming through way differently on the spaces as compared to how it's coming through on the live stream. Huh. Even my audio seems to be breaking up on the spaces. That's interesting. Wonder why that is. Let's see. What can I do to fix that? So just used this the other day too. We didn't have any issues. So let me.
Commodity, different sort of trade happening around these more like alliances rather than in a global market.
Do you think that, I completely share your view on that. What I'm trying to figure out is whether this is creating a step change in inflation, i.e. the trend of the last 30, 40 years is gone, or whether demographics, technology still kind of...
So let me try that out. So what I'm gonna do is change my I want the microphone to be that still. Yeah, that's so annoying. It's weird. Give me just a second. Try and figure this out. It is very, very glitchy in the spaces. All right. I know some people are watching from the ladder. So what I'm going to do is I'm going to end the space, and I guess I'll try it again, and we'll see if this fixes anything. So I'm on Money Match Gaming's page, right? So I want to see if it'll fix it. So if you're, I'm on the only one of spaces right now, anyways. So I'm just going to push end on that. And I wonder if part of that was because it was being recorded or something. But all right, let's try to open this back up before I switch a bunch of sound settings. So I'll end up messing things up. All right, cool. So I got a new one up there. Skip that portion. And we should be live. I could switch my mic over there because I feel like it's the two of them going through that's messing with the mic maybe. But let me listen and see if this fixed anything. That's like the only thing that I could figure would be actually messing it up more so. All right, so testing. 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 All right, seems to have fixed. So I'm gonna keep listening from this one real quick, and we'll see if it breaks up during this raw Paul thing. I'm gonna start this video back over then, this raw Paul video.
Are we going to have a recession? Is inflation going to infinity? Stagflation? There's so many voices out there saying so many things, but how do you figure out the good takes from the bad? What happens if everybody's wrong? Here's my take. I think that economic growth is going to fall sharply at the second half of the year, sharper than people expect. And maybe that changes the equation for the Fed. I think inflation's going to ease off quite sharply too. But I've been in markets long enough to know that we all get it completely wrong sometimes, and I could be dead wrong. That's the power of Real Vision. It's that we host amazing conversations with some of the world's greatest analysts and investors so that our members have the information and analysis to inform their own thinking. Over the last weeks, we published some incredible conversations about what's ahead and how to invest against it. In this video, we've distilled several of them to their key takeaways to get you up to speed quickly. There's a lot going on. So I just wanted to pick your brains, see how you're seeing the world. So give us your big picture view, and then we'll start digging into some stuff as we start chatting.
So I think kind of like how COVID-19 accelerated a lot of trends that were probably already going to be in place anyway, I think the recent military conflicts we're seeing are kind of accelerating some of the problems that were already mounting. And so, for example, we already saw Europe have some energy issues even before any of the conflict broke out, and some of that was now accelerated. I think same thing for food insecurity and things like that. And essentially, I think what we're seeing is a slow kind of unwind of the global monetary order that's been around for the past 50 years or so, and moving towards a more bifurcated world, where we have maybe a little bit more decentralized payment channels, maybe more decentralized choices of storing value, as well as supply chains themselves becoming more bifurcated because we're seeing, food protectionism, commodity protectionism, commodity, different sort of trade happening around these more like alliances rather than in a global market.
Do you think that, I completely share your view on that. What I'm trying to figure out is whether this is creating a step change in inflation, i.e. the trend of the last 30, 40 years is gone, or whether demographics, technology still kind of trump out in the end, and this is a temporary structural shift we're seeing, which is generating this.
So I think most inflation is transitory, but transitory can last for years in inflation's case, right? So in the 70s were transitory, but it was, it was long enough that, it wasn't really transitory in terms of a trading perspective, investment perspective, a lifestyle perspective. And so my base case for a while has been that the 2020s would be more inflationary than the 2010s. The exact height that we're going to reach depends on these variables that are hard to predict ahead of time, like whether or not there'll be war, whether or not there'll be factors like that.
So that's good to know. Interesting, or not good to know, but interesting to know that it just keeps breaking like this. Like after it's good for a few minutes, and then it just breaks. Like I could make my microphone on the same audio frequency as the default speaker. I don't think that's what I want to do though. Test, test, test. It might be something with the 2x of it. Nope, still breaking up there. I wonder why. Huh. Oop, no, don't connect to the other space. Just turn that off for a second. Turn it back on. Take it off, turn it on. It's making a noise and I turn it on and off. Yeah, let's see if we can adjust settings if that does anything. Sound effects could turn off, maybe. And I know if you're watching on a live stream, it's not having those same issues that it's having on this other portion of things. But I would like to, I'm like, dang, it would have been really nice if yeah. Huh. Can hear speakers echoing other sounds, problem connecting, stability issues. Couldn't start schedule space, mute didn't work, issues managing speaker requests, didn't like the spaces, other technical issues. Yeah, I'm gonna go with other technical issues. Sound started wonderful and then sound just broke. Like, huh. I'm gonna do one more and just call it test. So it's such a shame. Alrighty, so we're in there for the test. I'm gonna put it at normal speed and see if that doesn't break it this time. We'll find out soon enough.
And so I think now we're at risk of hitting some of the higher levels of that kind of range, that probability range that I think was going to play out anyway. And now we're kind of on the higher side. So I would characterize this kind of like the 70s or the 40s in the sense that we are going to probably have a pretty persistent amount of inflation. But even then, it won't be a straight line. If you looked at the 40s, you had price controls at some point. 70s, you had price controls, you had wage controls. There are periods where even in an inflationary decade, you can have disinflationary periods, right? So you get these waves of inflation. And I think the 2020s will be no different, where you could get, for example, a de-escalation of some of the big trends we're seeing now. Things can be overdone, traders can pile in, things get too consensus, and then there's some sort of kind of unwind of that, and then you can have another spike up. We've already seen this happen in European natural gas, for example.
Yeah,
there are periods where it got overdone, came back down, and then got even more overdone.
All right, so I'm going to end the spaces thing. I'm going to continue. Sorry for anybody who's been watching on the live stream portion of things, and it's been going smooth on the live stream portion of things I know the entire time. So sorry while I figured that out. I do want to continue this just because I think it's good information. Let me delete some of these messed up tweets. I got to switch accounts though. So sad, man. Because I wanted to use that for just playing music and stuff too. I wonder if I play audio tracks, straight up audio tracks, if that's going to have any issues in the long run, because it was going so good. Okay. All right. So we're going to continue this thing. Yeah, and again, apologies for anybody that's been watching on the normal live stream of things. Yeah, there have not been these issues with the normal stream. So let's play this thing.
And I think you could have the same thing on kind of a longer trend line. So I do think that if you look over the past 25 years or so, historically, money supply and CPI, if you use a 5-year rolling periods rather than the noisy kind of year-over-year period, there generally is pretty strong correlation, but there are periods where you can have a pretty significant disconnect, and that's usually due to some rapid technological change. We've unlocked some new abundance that allows for less inflation than you'd expect from the money supply growth. And so that happened, for example, in the late 1800s. You had the invention of the internal combustion engine, you had electrification, you had the discovery of oil. The United States had nearly unlimited land, and so that was abundance. And you kind of had a similar thing over the past 25 years where we unlocked so much global labor, and corporations were able to do a lot of geographic arbitrage that you've had a disconnect between say money supply growth and wages domestically in many countries. And so I think that particular force is probably coming to an end, at least for a period of time, because I think we've kind of squeezed a lot of juice out of the globalization orange, and that now we might have hit kind of peak globalization, meaning we don't unwind globalization necessarily, but we could stop accelerating globalization, and all else being equal, that should be more inflationary.
One of the things I'm thinking of is I've been thinking that the 1940s is probably the most similar period, less so the 70s. It's the post-war. It's kind of the same kind of structure we got now. GDP was volatile. Inflation at first took off and then kind of eased over time once we started to see manufacturing pick up and all of that. We saw yield curve control. We saw a lot of fiscal stimulus. What period do you think we're most similar to?
So I do think the 40s are the single most close period for what we have now, and that's because of in this whole debate over the past few years that people had about inflation versus disinflation. What is money creation? Where does inflation come from? So what made the 40s different than the 70s is the 70s was very bank lending driven inflation, right? You had the demographics boom, the boomers were kind of entering the home buying years, and that was around the world, and so you had a big expansion of money supply led by commercial bank lending, and on top of that you had a fuel to the fire with deficits around guns and butter program, Vietnam War, things like that. But it was really bank lending driven type of inflation, whereas the 40s were totally the opposite, where banks were doing a lot of lending, and it was that monetization of very large fiscal deficits, the wartime finance, kind of a command and control economy. And also in the 70s you had super low debt levels, at least public debt, and pretty low private debt levels, so they could raise rates dramatically to try to cause a mild recession, kind of contain inflation without causing widespread insolvency. Whereas in the 40s, when you had sovereign debt levels very high due to the war, you couldn't realistically raise rates to double digits, and so instead they held rates low. They did yield curve control, and so that decade, the 1940s, if you go from say the early 40s to the early 50s, when you had that kind of final inflation spike, you had about 6% average annual inflation, but it was very bumpy. You had literally at one point technically 19% year-over-year CPI, but then the next year you'd have like 0 or even like mildly deflationary. Then you'd have another spike, and so I kind of characterize this period similar to the 40s. The one thing that might be similar to the 70s is the energy situation. So what made the 70s also unique, besides the demographics boom we had, is that U.S. domestic oil production peaked in 1970. So we had this kind of nearly a century-long continual expansion, more or less, of U.S. energy production. That peaked in 1970, and so the U.S. became more reliant on the Middle East at the same time as we were going through that very big demographics boom, and that's what fueled inflation, because you had that supply.
Yeah, you had a supply and demand shock at the same time.
Exactly. Whereas now we have less of a demand shock, obviously, but we do have a supply shock, and so I think we have 40s-style monetary and fiscal policy combined with not unlimited commodities, right? So that's where we get this more inflationary environment from. So I think the 40s are similar environments, especially because right now the United States looks like the 1940s UK, because back then the United States was running structural trade surplus. We look more like China in some ways, right? We were the rising power, we were the export place, whereas the UK was more of the established power, the structural trade deficit, and going through the same sort of wartime financing.
James Aitken, he's got 30 years of financial experience and is widely followed by policymakers, investors, hedge funds around the world. He takes the secular inflation view, as does Gerard Minnack. Gerard runs Minnack Advisors, and he also advises the world's most preeminent hedge funds, family offices, and institutions. What's interesting about Gerard is he was a secular stagnationist for decades until now. He's changed his view.
I've been a card-carrying secular stagnationist for a long time. Before even Larry Summers popularised the term, I was telling people that the world was turning Japanese. I've resigned from the club. I think the era of secular stagnation is over, and I do think the pandemic has been the catalyst for change. I say catalyst in the right way to use the word. It's accelerated changes that I could see were going to happen anyway. With fiscal, a change in central banks, higher capex. I think after 4 decades, where the forces of secular stagnation have been becoming more powerful, we finally see a change in the secular trends. And let me just make it very practical for the people who watch this who are more interested in market outcomes than they are in economics. The key financial consequence of secular stagnation was the trend decline in interest rates. We have seen for 4 decades the cycle in interest rates in the US. Every cycle low has been lower than the prior low. Every cycle high has been lower than the prior high. So and you weren't doing this, I wasn't doing this, we weren't trading markets in the 70s. Unless a listener was watching markets in the 70s, none of us has seen a cycle where the peak in the 10-year Treasury yield was higher than the prior peak. I think that's coming. I think in this cycle, we get the peak surpassing the prior peek, and that's the most concrete outcome of these secular changes. Now, obviously what's happening in Ukraine complicates that, and there are tail risks there that I appreciate. If we could put that to one side, which is in a real world sense was impossible, but prior to Ukraine, I was absolutely telling people that we would see interest rates in the US go higher than we have seen for several years. It would be the first time that we've seen a cycle peak exceed the prior cycle peak. It's still my base case, but with a little less conviction because of what's happening in Ukraine. As we came out of the GFC, the market was saying, you know what, the long run real Fed fund rate can be 2 to 2.5% positive. And that was what they were also pricing prior to the GFC. So no change. Despite the depth of the downturn, we were going to go back to a world where ultimately the neutral rate of interest was over 2% real, and we would have positive real rates on average through the cycle. It was only when you had the Euro crisis and austerity in the US that the near-term rate expectations collapsed and people moved to assuming lower for longer. But even then, they were expecting that we'd go back to real positive rates in the long run. Last 2 years, that real long-run Fed expectation has turned negative. So we have markets now that are no longer pricing lower for longer. They're pricing lower forever. We never get out of this. We always have negative real rates. Once again, it's the resilience of the view that nothing has changed. And I just think that's a mistake. I think the world has changed. And that's not to say that we're going to get necessarily higher inflation. It's to say that the interest rate required to have a normal inflation rate is now higher than it was post-GFC. And the peak in rates this cycle is going to be higher than what the market expects. And the world has changed. But the market so far, I'm going to say, doesn't agree with me. The resilience of the economy in the face of rising rates is what I debate with everybody at the moment. And what's absolutely central to my view is that the US, and this is particularly true on the US, it's not necessarily true elsewhere, but I think the US will be more resilient than markets recognise. I think the household sector is in as good a shape as it's been for 3 decades. It's delivered. I mean, delevered by defaulting, but hey, that's deleveraging after the GFC. So debt to income is down. It's at around about 100% of income. The debt service burden is at the lowest level since the mid-60s, and most household debt in the US is mortgage debt, and most mortgage debt is fixed rate, so it takes a long time for Fed rate changes to feed into debt service burdens. There's a lot of saving that's been built up through the pandemic because of unspent stimulus. But most importantly, and it comes back to the change in the Fed behaviour and a point I mentioned earlier, which is that wage growth is so strong. Now, for the average American, they don't get dividend checks, they don't get interest checks. I mean, no one gets interest checks at the moment, but in normal times, the average American doesn't get interest checks. Their bread and butter is wages, is labour costs. Now, in the year to December quarter last year, that was up 3% real. So that means the average American getting 3% more. That's with inflation at 4-decade highs. The nominal increase in aggregate labour income was almost 9%. Now, what I expect is that inflation will fall over the next 12 months. I think that labour income growth will also slow a little, but I think inflation will slow faster. So we're going to end up at the end of this year, I think, with aggregate real labour income running at 3 or 4% real. Now, if that translates into real consumer spending, given that consumer spending is 70% of GDP, that's going to add more to GDP growth than any sensible estimate of what trend GDP is. And interest rates are not going to make a difference. I don't want to come across as a bear at the moment. I mean, I think, in my worldview, this is going to be a tough period for low yield, no yield assets.
So I should also mention
that runs
what
the risk
this
gap.
video is doing is going to a bunch of different Raw Paul interviews. So I was hoping it was going to be more of like a specific timed one, but I might move on to the Tom Bellew, where he's talking with Ray Dalio.
From, on the one hand, ostensibly safe assets. I mean, who knew bond yields could go positive? You know, there's going to be people who've been in the market a couple of years ago. This is like a Y2K problem. I didn't know that you're going to have a plus sign in front of the bond yield. And here I'm going to I'm not going to turn on your toes, Rail, but anyway, to the other end, which is crypto, right? So, yeah, no yield, speculative assets. So, yeah, I think the two edges of the risk spectrum are going to be under pressure, but the stuff in the middle can do okay. I mean, history shows that your broad-based equity markets, they do okay when the Fed's tightening. I mean, what's a killer for equity markets is recession, and it's not until markets sniff out recession that they suffer. Putin in the pandemic changes everything, and I don't think the markets yet worked that out. But the market is still in a pre-pandemic mindset where, as I said, when I was by Bloomberg, there is no debate. The market is saying we remain in a low rate, low growth, low inflation, structural situation, and I just think the market is wrong. And it will take time for the market to come around to my view, but I think that means that, particularly for rates, the cycle peak is going to be higher than what most people expect. Can I get my high horse for a few moments?
Do it,
Yeah, because everybody tells me the reason we've got expensive equity markets is low rates. Give me a break. That's bullshit. Low rates historically have gone hand in hand with equity markets that derate. Low rates do not lift equity valuations. If you look at the long run relationship, earnings, either forecast or trailing, today are lower than they were at the peak in 2008. So we've had global equities outside the US 14 years. Zero earnings growth. No wonder markets derated, notwithstanding low rates. The US was absolutely the exception, and it re-rated. Now, the forward-looking point is, if you live by the sword, you'll die by the sword. If you re-rated because rates went down, you'll derate when rates go up. But
so I'm gonna leave it at that portion. They are covering some good macroeconomic stuff. However, I was hoping this would be one individual interview, not them kind of just jumping all over the place from one interview to the next interview to the next interview. So I'm going to move to this Tom Bellew video with Ray Dalio.
New York City is becoming more dangerous. Chicago's becoming more dangerous. San Francisco's becoming more dangerous. You're seeing people leave some places for other places. The greatest danger for most people is failing to look at the things that could be harmful to them.
Ray Dalio, welcome back to the show.
Great to be on your show again.
Dude, I'm always excited to talk to you. This is an incredible phase that you're going through in your life where you're taking all of this incredible information that you've gleaned through your years in the financial markets. We're living through a truly unprecedented time of uncertainty, disruption. I think a lot of people are really afraid in terms of what's going to happen to their money with inflation. Are we headed towards hyperinflation? And in your book, The Changing World Order, Principles for Dealing with the Changing World Order, and the video by the same name, which is blown up. I think the reason...
All right, I'm gonna do it again. Moving into this next video, I'm gonna test out another space. Wish me luck, guys. I hope it's not horrible. We'll see.
People are reacting to that is everybody has a sense that something is happening, something that they don't understand how to navigate, and then along comes your book, your video, which really gives a lot of context to that. And so by the end of this talk, I really want to give people a sense of what they can do and what we can all do to forestall the essential decline of an empire, which is what we're living through right now. But first, to get to that, I think we have to understand your concept of this is just another one of these. And by looking back over the last 500 years of history, we can see this cycle that empires go through, and the US is just the most recent one to go through it. If you don't mind walking us through a thumbnail sketch of the 6 stages of an empire, and then we'll talk about where we're at now and what we can do.
Okay. Let's start by describing it's something like the new order to the next new order. And when I mean a new order, I mean the new system, right? Like the world order was made in 1945 at the end of a war. And a civil war can begin a new order inside of a country. Like the Chinese Civil War began their new order inside the country, 1949. And so that's like a new beginning. And they always come out of wars. And a war is a fight for how the system works. So we'll begin there. After the fight of how the system works, it's a great leveler. It gets rid of a lot of the debts and it starts over. And then there's a new power. In the United States, the New
I
World
heard the
Order,
first
it was an
break.
American World Order, because the United States won World War II. It had 80% of the world's gold. Gold was money. It had the dominant military power. It had nuclear weapons. And because of that, we began the American World Order.
We literally got people together in a room and said, hey, we're going to be entering literally a new order. And they lay things out. It was in Bretton Woods, if I'm not mistaken.
Yeah.
And so I want people to understand, like, this is people, they get together and they actually decide this stuff.
That's right. They carve up the world. Here are the borders. This group gets this piece, and so on and so forth. And then they begin. And by the way, this has happened repeatedly throughout history. And so they start off with those new rules of the game. And you enter a period of peace and prosperity. And it's peace because nobody wants to fight the dominant power. The dominant power won, and you don't want to fight the dominant power. And so
you're exhausted. I mean, and this is one thing you're careful to point out in the book is like war is horrendous. And so part of what creates that period of stability is just we've seen so many people die. There's so much destruction of life, wealth, which is why, the stakes are high when you're talking about this.
That's right. And there's a change in psychology really that you're dealing with, because quite often these things take place. They take a generation or more to take place.
It's going a lot better this
and
time.
the people who enter the war do so boldly. But everybody who enters the war and then goes through the war wish they never went through the war because it's so terrible. But they come out, as you point out, and then the war is over. They want peace, they want productivity, and so on. And then it's a great leveler, less wealth gaps and so on. And they work well together, and they build a period of peace and prosperity. That is a long period of peace and prosperity. But during that peace and prosperity, more and more prosperity takes place, and they increasingly bet on that prosperity. And people get more in debt. And so you see the debt levels rise, and you see naturally, as prosperity comes, it comes in unequal ways, and some get richer than others. And so wealth gaps.
So I'm going to pause it. Most of me pausing it right now is just for a test purpose, and I want to see if it works out fine. If it does, I'm going to rewind just a few minutes, and we're going to restart the spaces. I did some changes to the spaces. I'm going to restart these spaces and put the appropriate titles on it. Uh-oh. Did it already break? I think it's good. Oh my goodness, I think it's good. So I'm going to roll back to right about here. You guys probably can't see that, but it's all right. In this space too. Oh my goodness, here we go. Man, and it's still coffee and crypto because I need this coffee. I've been so tired lately. Smurf. MMG. Cool. So I got the new title up there and all that good jazz. And all that jazz. I'm gonna push it and hopefully you don't break and all that jazz. Alright. So it's back up. Doing this spaces again. Hopefully it works out. If it don't work out, what can I say about that hasn't already been said about day-old lasagna? I don't know. Let me get back into this space. I'm going to be listening to it while we're going just to make sure it doesn't break. If it does break, yeah, we tried everything.
Power. And so
you're exhausted.
All right, here we go.
And this is one thing you're careful to point out in the book is like war is horrendous. And so part of what creates that period of stability is just we've seen so many people die. There's so much destruction of life, wealth, which is why the stakes are high when you're talking about this.
That's right. And there's a change in psychology really that you're dealing with, because quite often these things take place. They take a generation or more to take place, a lifetime. And the people who enter the war do so boldly. But everybody who enters the war and then goes through the war wish they never went through the war because it's so terrible. But they come out, as you
Bro,
point out,
I think
and
immediately
then the war is
broke
over.
again.
They want peace, they want productivity,
Like,
and
it
so
was
on.
just
And then
perfectly
it's a great
fine.
leveler, less wealth gaps and so on. And they work well together, and they build a
We
period
listened
of
for like
peace
about
and
5
prosperity.
minutes
That is
without
a
like
long
crackling
period
at
of
all.
peace and prosperity.
And now
But
it
during
broke
that peace and
again.
prosperity, more and more prosperity takes
yeah.
place, and they
I don't
increasingly
know-
bet
I
on
don't
that
know.
prosperity. And people.
I guess we're just gonna have to use the live stream today, and I'll have to try to figure out why it breaks so often. I wonder if part of it's to do with like yeah, I don't know. Don't know. It's so disappointing. But yeah, we tried. Thank you for coming in, Alpha. If you're interested in this topic, we're going to continue this on our live stream, which is on Twitter. So you can join us there. But we're having some audio issues today, so I'm going to leave it to just the live stream on Twitter. All right. Alrighty, guys. Well, we tried. It's really it's a little annoying.
People get
it was
more in
working
debt. So you see the
perfectly,
debt
and then
levels
just
rise,
decided,
and you see
again.
naturally, as prosperity comes, it comes in unequal ways, and some get richer than others, and so wealth gaps rise, and then those wealth gaps increasingly create opportunity gaps because the rich people have more resources to educate their children and give them the benefits, and so that happens over a period of time while the economy gets more indebted. And of course, as time progresses, other countries also rise. Those maybe that even lost the war, like Germany and Japan, they rebuild and they become competitors. And so what was a unique power of having won the war becomes less unique as there was more competition. And then you get a new generation of people who have a different mentality. They get used to those benefits and so on. And they are, let's say, less cautious in their financial behavior and so on. And so the classic ingredient also is that country that wins the war also has the world's reserve currency. Because, okay, you need a currency to transact internationally. It's like a language. You need a language to transact internationally. And the winner of the war gets the world's reserve currency because everybody thinks that's the most stable. And they also want to save in it. And so when you have a world...
I think that's important to really double click on. There's two things here that I want to go a little bit deeper. So one of the most profound things I've ever heard you say, and this really hit me, is that there's a reason this repeats over and over. And that reason is there's only so many personality types. And so people just are the way they are. And so if you put them into these predictable situations, they're going to react in predictable ways, which makes this whole cycle incredibly predictable. You can go back, you did a detailed analysis of the previous 500 years, and you just see the same thing happening over and over because, hey, the money's coming in, it's the roaring 20s, but the roaring 20s are going to lead to the 30s style depression basically every time because people are overextending themselves because they are making a faulty prediction that if I look back at the history of my life, because it has always been this way, it's always going to be this way, not zooming out and seeing, no, you're in a bigger cycle that repeats over and over and over. And the reason I want to hammer this home is since by the end of this, everybody watching, I want you guys to know what to do to prepare yourselves for this. This is Ray's whole point, is make sure that people are actually prepared. But you have to buy into the fact that this is predictable. Otherwise, you're going to ignore the advice. And so for me, recognizing that people just are a certain way and that thusly given similar circumstances, they will react in similar ways. And so that was, I think, really important for me to acknowledge.
Yes, and you can see it not just in the cycle taking place over and over, but if you deal with the cause-effect relationships, they're logical. So for example, if you have bad financial conditions as measured by if you're spending a lot more than you're earning and you don't have a lot of savings, you have more debt or liabilities than savings, you're not in a good financial position. That's a fact. And if you have a downturn, if the country as a whole experiences that problem, and you have a large wealth gap, you are likely to have a fight. I mean, so these cycles don't just take place as cycles. They take place as conditions that are measurable. And so in the book, it was very important to me not to just use words and theories of how this thing works, but to actually show the measures. What is the wealth gap? What is the amount of debt? What is the amount of printing? What are the conflicts that are taking place? Because then you can monitor those things.
All right, my friend, I have a big announcement. My incredible and talented wife, Lisa, is about to launch her new book, Radical Confidence. In it, she has many times big, exciting dreams, able to capture the struggle to achieve confidence is to get off track they want. But what Lisa being afraid is that leave the book and get ready.
These are patterns, they happen all over history and they repeat. And then because you're plotting all of this, and you can look at these leading indicators that you talk about pretty extensively in the book, there's 18 that you go into detail. A couple times you break them down into ones that maybe are more important than others. But as you peg, so if there's 6 stages to this arc, you said that the US is in stage 5. And to give everybody an idea, stage 6 is basically revolution, war. It's the violent restructuring of the economy. And whether we're in the 7th inning of stage 5 or the 3rd inning, I don't know. But the fact that we're in stage 5, which is obviously where there's massive internal conflicts, which rings way too true, and the massive disparities, which you did a really cool graph in your video where you show income inequality and that gap between the lines you filled in with resentment. And so you have growing resentment, you get populists on the left and the right, you get internal conflict, people fighting, and then you get a potential external power looking at you going, they're weakened by their internal conflict. And that historically is when a rising power makes its move.
Yeah, so I think there are 3 big forces to keep your eye on. And when you see them in their cycle, then it's clear. First, are you earning more than you are spending?
And do you want people to look at this at an individual level or at a country level?
Well, you can have both. I want them to look at it as the country, but the country is nothing more than the aggregate of the people. And so when you look at those 3 forces, I want to make sure that they're clear and you could align them up and you could see where you are. Is the country earning more than it's spending and building savings? Or is it spending more than it is earning and creating debt? Because one man's debts are another man's assets. And when somebody is holding those assets and they're producing a lot more of that money and debt, they go down in value. Money goes down in value as they produce it to produce that buying power. And then that gets people bad returns. It produces a higher amount of inflation, and it produces bad returns for holding debt or bonds. So in other words, cash or bonds. And then people get out of cash and bonds, and that produces rising interest rates while there's rising inflation, and that produces stagflation. So I want them to get the mechanics of that because that's happening now. You can see it. This is not controversial. We are producing a lot of debt. We're spending a lot more than we're earning. And as a result, they're printing a lot of money, and the printing of a lot of money creates a lot of inflation. And with that inflation, then nobody wants to, cash is trash. You don't want to hold cash, and you get out of that, and that causes rates to rise. And that's one of those 3 factors. So you can see it happening, and you can also see the cycle of it as shown in the book. The second force that is dealing with is the internal conflict force, how you are with each other. Are you operating cohesively, common mission, and moving in the right direction, the system working? Or are you at each other's throats? is the system threatened? Because history's shown when the causes that people are behind are more important to them than the system is in jeopardy. And that is a risky situation. It's a risky situation because it produces disorder, and it can produce a form of civil war. And yet those times when you have that, you see greater and greater polarity. In politics, it shows up at greater and greater populism of the left and populism of the right. And populists want to fight for their side. They're not moderates. Moderates want to work together to try to find a compromise that's best for the whole. Populists appeal to their crowd by saying, I am fighting for you. And they will fight each other. And that fight can be at the threat of the system. So in history, for example, we saw 4 democracies in the 1930s choose to become dictatorships as one side fights to the other because they become so disorderly. And we have a system right now that you could see that it is possible in elections that neither side might accept losing. And so the system becomes in jeopardy. And you see that the moderates leave the system. You can't be moderate. You have to pick a side and fight. And so you see this in the French Revolution. There were moderates in the early part of it, that recognizing that there were problems and wanting to work together. The moderates got guillotined. The polarity began. The same was true in the Russian Revolution. The same was true in the Chinese Revolution, the Cuban Revolution, and so on. Those polarity gets greater and greater as there's a greater intensity to fight. And that is the internal piece. And so you can see where we are in that internal piece. Right now, we see that moderates are dropping out of, choosing not to run for re-election. And you're seeing in the primary system that the fight is who's over most extreme in representing that. And you're seeing this greater polarity. And you see it reflected in many statistics. Something like 10 or 15%, I forgot if it's 10% of the Democrats or 10% of the Republicans, I don't remember, versus 15% wish the members of the other party would die. They don't want them to measure their, they don't want them to marry their children. I mean, there is a great polarity. And you're seeing that lead to changes in where people live. They're moving to different areas, not just because of tax reasons, but because of differences in values. And so that kind of, you can see it today happening, these things, but you also can see the arc of them in the book because it measures statistics. It shows these things happening. So when you have a financial problems and you have this kind of polarity and you have a bad time, you have a lot of fighting internally. So imagine where we are in the economic cycle. We're in the part of the economic cycle where they have given, the government has given a lot of money and credit to people. They put it out. Well, no surprise, that's leading to a lot of inflation. Okay, inflation takes buying power away from people. And it also means that then there's going to be higher interest rates, and that's going to squeeze people. And so that makes that wealth gap and that wealth issue more difficult. So that's the second force. And the third force is the rise of a great power, the geopolitical force that's going on, that we're seeing today with China and Russia and so on, and how that's changing. Because when the power of a country diminishes, okay, when we get weaker financially, or how we are with each other, and so on, there are greater vulnerabilities. And there's always the competitive power that learns how to become stronger. And competition always happens. There's the establishment, and then there's the new competition. And as they get stronger in all ways, militarily and commercially, and so on. And that's the dynamic that we're seeing.
Yeah, so we've got Taiwan looming in the sort of political background. You said many times in the book that that's an indicator that you'd really be looking at. If there was a fourth skirmish over Taiwan, that you would get increasingly worried. We definitely need to talk about inflation in a minute. I want to know what people should be doing in that environment. But first, and I don't know if people are like me, but the thing that got me to stop and really start paying attention to this was how far into stage 5 we are. That was the thing that compelled me that I have to slow down. I really have to look at this because I actually don't like thinking about money, despite my long-standing pursuit of success. That's really been about something else for me. Money's been a byproduct of that. And that's in the book, and I don't know if your number has changed, but in the book you say that you give a 30% chance of the U.S. falling into civil war, I think in the next 5 to 10 years, and that a major conflict with China at 35% in the next 10 years. And you said, look, it's a guess, but you lay out a lot of data before you say that it's just a guess. So it's obviously a very well-informed guess. One, do those numbers roughly hold for you still? And if they do, how do we pump the brakes on this?
I would say that those numbers probably are a little bit higher now, I would say.
I was afraid to say that.
Things are progressing a little bit quicker.
Do you mind ballparking me? If we're not at 30, are we 31? Are we 40?
Yeah, let's say 35 to 40%. On each, let's say, and I'm not being precise, but the events that happened in the Ukraine, and that is bringing all this development internationally up at a little bit quicker pace. It's the same dynamic. There are two sides, and there'll be neutral countries, just like in the war there was the Allies and the Axis powers, and then there are the neutral countries. And so that part is developing. The U.S. Conflict part is probably progressing a little bit quicker. So I mean, let's say the odds of that. On the world order, the developments in the Ukraine, maybe I should put those in perspective. You like me to do that?
Absolutely.
Okay. There is a very close relationship, a common objective of the Russians and the Chinese. So there is a competition in the world, and there's a dominant world power which is perceived as being overly controlling. So the Chinese believe that the policy of containment of the United States, in other words, just right within their borders, that there isn't a region that's suitable for them. Much the same way as the United States, there's always a geographic region as an area of influence in the United States, in the area like the Cuban Missile Crisis. Cuba, when there's a threatening power, in Cuba, we reacted to that. That kind of geopolitics, they believe that the United States is sort of containing them, and they are growing in power. So that there's that dynamic, and Russia has the same kind of view, and so that there's a common, let's call it enemy, competitor. And there are 5 types of wars. There's a trade war, there's a technology war, there's a geopolitical influence war, there's a capital war, and then there's a military shooting war. And we are in the first 4 of those wars in this competition.
With China or with Russia?
With China. We're not in a shooting war with China. We are in a shooting war of sorts with Russia and the Ukraine. We're providing arms, and so they're shooting. And so there's a military war going on, and we're in it in our way. So we're at those particular spots. And the capital war is sanctions. We hear the notion of sanctions. And what that means is they're economic. And the way they work is to shut off to produce economic pain by either not letting them get at their money or not letting them get to goods that they can import. And these have happened through time. In Japan, that was what set us up for the bombing of Pearl Harbor, because the United States cut off Japan's oil supply, was in the process of doing that, and also confiscated its bonds, much the same way as happening now. And that put them into a corner that led them to bomb Pearl Harbor, and then we went to a military war. So that's where we are now, and that also is risky because it threatens the value of the dollar. Because right now, debt is dollars. Any currency, the way you hold it is you hold it in the form of debt. You don't hold it just in paper. And because there's a rising inflation, and because there's a lot of printing of money, and because there's also a greater fear on a number of countries that they too could be sanctioned, there is a selling of dollar-denominated debt. So you're seeing that the bond market is going down. And interest
started escalating recently?
Yeah, that's right. And so there is that dynamic that's going on. The capital wars are the ones that accelerate immediately before the military wars. Usually the coffers are empty, they're printing a lot of money, and then they're trying to use economics as a weapon. So we're in that part of the cycle. Now, in terms of how this will transpire, I think there are three big questions that we're going to learn about and get answers to pretty quickly. The first is, does Putin and Russia win or lose? I'll describe win as what he wanted at the outset, which is win for Russia would be to have the Ukraine be some non-threatening position, such as a neutrality, a guaranteed neutrality, and for Russia to have control over eastern provinces, and for Russia not to be economically devastated, instead to be maybe have something like a 10 or 12% decline in GDP, and for Putin to be in power. If those four things happen, then the cost of his actions will have been worth the what was obtained from that, and that would be viewed as a win. It would be then also a loss from the Western countries. The world is looking at the power of American sanctions, because American sanctions are the greatest power the United States has. If it was a military power, the world has come to the position that a number of countries have had an equal ability to do harm to the United States militarily as the United States have to do to them. And so we don't have a dominant military power anymore, but we do have a dominant sanctions power. So if
we're still ahead of China?
The United States' ability to have economic sanctions is much ahead because it controls the world's reserve currency. That's a biggest asset. But in weaponizing the dollar, it is leading those to get around and not want to hold dollars because they get worried that they're going to be confiscated. So we will see if that dollar sanctions power, we'll see how powerful it is. If it isn't very powerful, that's going to be a problem.
Because others will perceive our weakness.
Well, and they'll also realize then you only have military power. I mean, think about it this way. If this war is not a difficult war for the United States and Europe for the most important, it produces higher oil prices and the like. But while Russia is throwing in military, we are throwing in sanctions. And these sanctions don't cost lives. It's not a military war. So we're fighting it with sanctions and they're fighting it with military. If you didn't have that, how would you fight this war? It would be a much more difficult situation. And the third thing that we're seeing is how the world is lining up. The world is lining up, which there are in wars, typically Axis and allied powers. And you can see by the actions that are taken as to which are lining up. Who voted in favor of what at the United Nations? Who is allowing what rules? Who is trading with the other party? Russia actually put out a list who are friendly and adversarial countries. You'll see at the next G20 meeting who will be in favor of Russia attending that meeting and who will be in favor of it not attending. And that's making clear how the sides are lining up. So you're seeing those sides line up, and all sides are in preparation for war.
Okay, so all right, we've got that escalating. Things are moving faster between us and China than we thought. Escalating tensions here in the U.S. Inflation is one thing I want to really touch on. So what do you do in an inflationary environment? As somebody who's I don't consider myself a savvy investor, and so I used to joke with my money manager, I want to be as close to my money buried in the backyard as possible. And obviously for inflation reasons, I have since learned that is a terrible strategy. But what do you do?
Well, first thing is you realize that holding cash and dead assets is a bad thing. So a lot of money is in cash because people think that cash is the safest investment. But they are measuring that in the amount of money that they get nominal returns, and they say it doesn't wiggle much. But think about it. It's lost, as of the most recent statistics, 8.5% over the last, inflation is 8.5%, and they receive virtually no interest rate in cash. And so there was an 8.5% loss of buying power as a result of inflation. And so psychology should change, and is in the process of changing, to realize that you have to think in terms of buying power, not the number of dollars you have. And you have to think how much is your buying power. And so the worst thing is to be in cash. Like I say, cash is trash, and to be out of the bonds. The next thing is to have a diversified portfolio of assets. The diversification means some assets that are inflation hedge prone. For example, you're better off to own an inflation index bond than a regular bond.
What makes something an inflation index? Like what are the natures? Is that going to be gold and precious metals, tangible things? Like what are the things that are resistant to inflation?
Yes, and inflation index bonds because their returns are tied to inflation.
Interesting. I don't understand that well enough to know how one would do that. Is that worth going into? I don't know what the punchline is going to be.
Yeah, I think the punchline is, if you take a look at it, it's simple. It's like a regular bond, except its payments are linked to the inflation, so they compensate you for inflation.
So is this a government bond?
Yeah, government bond.
Okay.
And there are some tax advantages to them too. So look into them. Okay?
And why don't people just flood into that?
Well, I think it's one type of asset. The flooding into any one thing is an issue. But moving from the nominal bonds, in which the government just says, I'll give you this amount of money, and it has the unbelievable and unlimited ability to print the money it gives you, it would favor inflation index bonds. And it could be other assets. Some people would say something in terms of cryptocurrencies, or it might be those other assets.
What's your take on crypto? So crypto is a huge part of my portfolio. I think you'd be mortified to see just how much so. But yeah, what are your thoughts on crypto?
I think that too much people pay too much attention to one at the extreme of the other, that either somebody's all crypto, or they're all gold, or they're all something. And I believe that that's a challenge. I think that crypto, like gold, is not a productivity earning asset, and it can be controlled by governments in lots of ways. It's been outlawed in a number of places, and it also can be monitored. The privacy element is not secure from governments doing monitoring, and the size of crypto is about the size of Microsoft. It's all crypto combined, and so to be overly concentrated in it, in my opinion, is a mistake. But to have some of it is a good thing. So the question is always what amount of it. So that's, I have a little bit about it. I probably shocked you about how little I have. You shocked me about how much you have, but having some of it. And other things I would say is that geographic location is important. In other words, not just all in U.S. and U.S. dollar assets. I would say that the three things that, again, I'm looking at if I go down countries is first, are they earning more than they're spending? Do they have a good income statement and balance sheet? This is going to be very important in the period ahead, because the amount of credit that's going to be available to bridge the gap between spending and earning, cash flows and so on, is going to be quite narrower. So a lot of companies even that were able to raise cash and not have good cash flow because of maybe growth expectations in the future will find it more difficult. That'll be true for individuals. It'll be true for countries. So does it have a good income statement and balance sheet will be important. The second is places. How are they working with each other? Is there civility, or is there civil war, on the brink of civil war? Because countries where they work well together, they're productive, are going to have a real competitive advantage. Orderly places, safe places to be.
What countries on the rise in that? So obviously I'm shocked to say this out loud, but the US would be in a bad place in terms of that. What are places that have great stability there?
Well, there are parts in the United States that work better than other parts of the United States.
Meaning like local government bonds or something like that?
Well, I'm now talking about the like where you want to be, and then that'll be. But yes, it could be bonds, it could be places. I'm talking now the places. For example, we just had the shooting in New York City on the subway, and New York City is becoming more dangerous. Chicago's becoming more dangerous. San Francisco's becoming more dangerous. You're seeing people leave some places for other places. You're seeing them leave, I don't know, to Texas is Austin, or to Florida, and so on. So there are differences within the United States and differences from the United States.
People need to think about picking up and moving and actually going and being in a different place.
Yeah, and those are also the better places economically, because when people do leave, and they do that, those who leave are higher income and higher taxpayers, and as a result, there's more of a hollowing out that takes place in that, which creates an economic problem as well as a lifestyle problem. So I think you're going to see greater differentiation in places, which affects where you want to be and where people who can afford to be there want to be, and also affects what their economies and markets are like. And that's so. And then the United States. And the third element is are they financially strong? In other words, income more than expenses and good balance sheet. Are they civil with each other, so they're working together rather than hurting each other? And number three is, are they in a position where they're likely to be in a war, or are they likely to be out of a war? You don't want to be in a war. So, and those places, investing-wise, history has shown, do worse because they have to spend more money. There's more problems, more pain that's being exchanged. Neutral countries in wars do very well, as it turns out. So elements of diversification. So it's a long-winded answer to your question, but I would not want to be in debt or cash and those instruments. I would want to diversify well with a bias toward inflation-protected assets. And I would want to diversify between locations, countries, in terms of the investment based on the criteria I just mentioned.
Okay, that all makes sense. Now, you've said that competing in the markets is harder than competing in the Olympics, which I found funny and distressing all at the same time. You said that you guys at Bridgewater spend hundreds of millions of dollars on research alone, and that somebody like me is going to have to compete with that. So what's the advice for the average person that isn't going to be doing that? And how often should people be reassessing? I feel like in a turbulent environment, should I be looking at this like every week? Like how often do you, like if you were managing your personal account without computers, at least without the sort of hyper auto trading, how often are you looking at it? And how do you avoid trying to compete against the best of the best of the best?
I think that you have to understand what a good strategic asset allocation mix is. That is how to create a good, well-diversified portfolio, assuming that you don't know how to make these buy and sell decisions. Because what happens is, think of it, it's like a poker game, and you're playing against others. And those others are putting in, most lose, most buy at the highs and sell at the lows. Most behave emotionally. Most don't have the same information. So it's a very difficult game. Like I say, you wouldn't think I'm going to go try to compete in the Olympics, but more people think that they can compete in the markets. I think the market's going to go up or down, and the track records there are terrible for most people. Okay, because of those handicaps relative to others. So for that reason, you start off with a well-diversified, balanced portfolio, because diversification can reduce your risk without reducing your return. If you understand how to get equally attractive investments that are not correlated with each other, that diversify each other, you can build a diversified portfolio. It would take too long for me to explain, how to do that right now, but that becomes the headline. I described it in my book, Principles for Life and Work. Also, Tony Robbins described it, and he asked me about it, and then described it in his book. I forgot the name of it.
Money Master the Game.
Okay, and he describes it pretty well. And for that, I direct you there. I'm going to be writing a book. I'm in the process of doing it about economic and investment principles, and then I'll describe it more completely. But right now, that's the best I can do in this interview.
No, for sure. That already is really helpful.
Hello, my friend. You know that I believe success requires you to see failure as the ultimate learning tool. Success requires you to be disciplined and gritty and to never ever quit on your dreams. Hey, I'm going to teach you my
at Web3. The reason I don't treat it as an investment, I don't think of NFTs as an investment class, even though people are treating it like that. They're treating it like a hedge against inflation. Some people treating it like a get-rich-quick scheme. It's that same idea that the vast majority of the money is being made by, I think, less than 5% of the wallets. And so 95% of people are getting beaten to death, while 5% of people make all the money. And it feels like that's a similar idea to how somebody like myself, who I know enough to like get moving to do the research and things like that, but I don't want to be in there trying to day trade. So is this, in some ways, you definitely want to be thoughtful about your mix, diversifying, making sure you're going for uncorrelated asset classes, following the guidance that you just gave us. But is there also an element of don't try to time the market, it's time in the market? And so get my diversified portfolio, set and forget, or do I need to be in there like constantly re-upping, rebalancing, that kind of thing?
It's a little bit like you can start off with, and I think this is most important, what's your strategic asset allocation mix? And then it's like going to the poker table. And then you say, what is my angle? Where do I get to take money away from others because I'm better at it? Okay. But everybody should start with a balanced portfolio. Okay. Most everybody, they have careers to do. And I think they're arrogant. They think they can go in there and they can take money away. Maybe some can. But if you're going to play that game, the first thing is also test your decision rules. Don't just go in and then you say, I'm going to wing it and do it. And because you won't even have enough sample size in your decision rules to know whether you're good at it or bad at it. After the first 5 times, you're going to pronounce how you are. It's a learning experience, just like any other learning experience to develop your expertise. What I find is really important is to take my decision rules and test how they would have performed in the past to at least give me some perspective of what I might expect in the future. But you have to think through a game plan and operate that way. So I, by and large, would say, first, the most important things you could do are actually the simplest things you could do to build that strategic asset allocation mix, not to be out in there day trading your life's fortune away.
That makes sense to me. I want to go back to the idea of we've got the cycles. It's so far, every global reserve currency ever has collapsed and been replaced. And so it would certainly be hubris to think that the US's time as that reserve currency is going to last forever. But in your video, you showed a guy like holding up the falling line and trying to forestall that effect and hopefully, carry it out longer or at least make it a more gentle tapering out. What can we be doing to forestall some of the internal conflict? How do we get I know there's a lot of momentum going that stops people from making more than they spend at the government level. But are there techniques, like if I could convince you to run for office and you got elected, what would you do to forestall that inevitability?
Well, again, there's those who control the system and what should be done. And then there's what the individual should do, assuming that they can't control the system. So your question really is, I view it in terms of those two parts. What's necessary is you have to earn more than you spend as a society. And so we look at our country as a whole. And so you have to get financially sound.
This is what people talk about with austerity, right?
Well, or productivity. In one way or another, it's the same thing.
So productivity would be make more money. So keep spending what you're spending, but make more money.
That's right. Okay. And that opportunity has got to be as much equal opportunity across the population, because if it is for the averages, may be very misleading. And if most people are not benefiting or have that opportunity, it is something that is suboptimal for the development of the country because you don't know where the talent comes from.
What's the lever we pull to do that, though?
Well, let me get it out, and then I'll get to how I would do it. Okay, I'm just saying. Okay, what you have to do is two basic things. You've got to be financially strong. So you have to be productive, so that your income is greater than your expenditures, and you've got to be good with each other. You work well together. You're not destructive with each other. And
compromise.
If you do those two things, like you're good with each other, and so you're productive and you're financially sound, you've got to do those things. Now, under those things, there are a number of things. You have to educate your population well. They have to learn how to be civil with each other. You have to provide a system that allows productivity to be good, blah, blah, blah. But to answer your question and really get to the punchline, because that's what I need to do. You need to create a system that both increases the size of the pie and divides it well. Okay, and most importantly, divides opportunity well, not just the output well, but opportunity, but also the wealth well. So you have to increase the size of the pie and divide well. And the way that I would do that is I would start by having a bipartisan cabinet. And bring together smart moderates, people who can work on both sides. Because I think that the first thing is that the polarity is going to kill us. I think we're going to fight before we're going to resolve smartly what we should do. So I would want to have a bipartisan cabinet, and I would also want to have a program that's like a Manhattan Project, in which I take the smartest from both sides and work to engineer a program that is like that, so that when they come out with the program, there's the moderate left and the moderate right, in a sense, who are agreeing, because we each have our own ways of doing this thing, but what we'll do is we'll kill each other over which exact way we do it. And I think that to have a common bipartisan program that is raising productivity and redistributes opportunity and wealth well is the most fundamentally important thing. So I would have that bipartisan cabinet, and then I would have those moderates have to deal with the extremists on their parties, because I believe that more than likely it's going to be the extremists who are going to destroy the system, threaten the system, because they won't be able to compromise. The fight will be so bad, and the answers do not lie in the extremism.
Yep, I would agree with that very much. So if you were to guess, what are going to be some of the elements to create that are going to come out of that Manhattan Project? Like if you had to throw some of your own ideas in the ring, I'm sure you've thought through this.
Well, it's kind of like very easy. You can see what happens before. education and infrastructure are two areas that are fabulous in terms of being great investments and are not treated as great investments. My wife, particularly, and me peripherally, work in the state of Connecticut for education. Let me give you a picture. Connecticut is usually average per capita income number 1, 2, or 3 in the country. And in Connecticut, in high school students, 22% of high school students are disengaged, which means that they have an absentee rate of greater than 25% and they're failing classes.
Whoa.
And or disconnected means they dropped out of school and they don't know where they are. So 1 in 5 students, more than 1 in 5 students, education system is failing. They will be on the streets. They will be not doing good things on the streets. They are likely to be incarcerated. There are gangs and gun shootings and so on. That almost end. Okay, that almost end. That there have to be, there's a level of bottom to which you can't let the society go. And we found through largely her efforts and so on, that for $7,000 to $9,000 per student, we could get them through high school and into jobs, and then they'd be productive.
What is it about that money? How do you allocate that to break that cycle?
There are things that you can do at certain points in their life, particularly between 8th and 9th grade, that you can help them make that transition and understand how they're doing, and then work with providing supports to make them successful. Some cases, putting them in a direction where they go into trade programs so that they'll be prepared for jobs and so on. But my main point is, that's only just one example. As I see, when we're operating a lot philanthropically in different areas, and we see so many cost benefit to creating improvements in great investments that would have a big effect. But it starts with real education. And because you have to have an educated population and a civility, it's a very difficult thing when the children are raised where, it's quite often a single parent in a slum, where there's drugs, where there's guns, where there's gangs. Who are you going to relate to? What is your best likelihood of an income? It's through drug dealing and it's with gangs. That's your community and so on. That cycle has got to be broken. And I'm only giving that as one example. But there are so many cost-effective ways of putting in money. Infrastructure, like to not have laptops and connectivity. Is today the equivalent of not having running water and electricity or the telephone. And we see it with education. We were, again, in Connecticut, we found 60,000 students didn't have computers. How were they going to get educated? Whoa. So we got them the computers, but and the society that would allow that, there's something wrong. And then connectivity. So certain basic infrastructure. I mean, there are a lot of good investments that are not necessarily, they don't necessarily come from the business profit-seeking world. Profit is a good but highly imperfect way of allocating resources, because in some cases, building a road may not be profitable, but it might, when the United States built roads and it built railroads and so on, it dramatically increased productivity. So there's infrastructure and changes that have to be made. And there's great advances on these things, great advances on how to educate using computer technology that also not only helps the student learn, but it also helps the computer learn about the student and how they think. So there's a lot of potential. Think about it this way. The world is richer today. We have more per capita income. We have more technology and know-how. It just has to be redeployed in a way where it maximizes the efficiency and essentially the equality of opportunity, so that we pull together. Now that's a dream, Is it a likelihood? It's not a likelihood, okay? Because people in these cycles go to fight and they're focused more on them winning.
Yeah, I want to put a point on that. So as you were talking about it, I was like, okay, how do we end up here? How do we get people out of this? There's a couple things that I see. So as a kid of the 80s, loving America was cool. And like, it was just natural. All my friends loved America. And recently I had a friend who was like, oh, I went on vacation and I put up an American flag outside my door. And I was like, I guarantee that's going to get ripped down. He was like, oh yeah, it's already been ripped down. And I was like, that's crazy. Like, we live in LA. Like, this is a major American city. And for that to be considered offensive. So anyway, I think about these kids. So I don't know how much you know about my obsession and why I work as much as I do. I work in the inner cities. I work with these kids that you were talking about, like up close. You get to know them. You love them. You want them to succeed. You want them to do well. So you start asking a basic question. They're really smart. Not universally. It's normal distribution. But you've got some really smart people in the inner cities just being destroyed by their zip code. So I'm like, okay, wait, how did we end up here? Like, what would they have to do? No, whatever. And for me, I came down to a lot of this is mindset. Like, they've been told the world doesn't want you to succeed, so they don't even try. Which, if you believe that the world is just stacked against you and that it's impossible, then of course, why would you try? So I was like, okay, we've got to get the right ideas in their head so that they will take the right actions to learn and get educated. Now, I didn't get deep enough to learn about how many people don't have computers and connectivity and all that. That's distressing. But when I think about why, because you said in a society like ours, something is wrong if you're allowing that to happen. And my answer to that is, you've got the civility quotient of, in some cases, I just don't want to see the other side have their way. So if the right answer comes from the wrong side, then I'm going to fight against it if I'm the other side. Then you've got, we can't agree that the country is worth loving. So even just saying like, hey, we've got to put aside our differences because we're all Americans. And let's make sure that we are elevating all Americans. It's like, nope, like I can't rally behind the flag. I can't get behind this idea. And so now all these people are stuck in this purgatory of nobody's looking at metrics to say, hey, we are trying things. Is it actually working? And if the metrics aren't improving, then we have to change the policy. But that's not happening because of all the fighting. But I do think that it's partly because you have that, we can't even agree to rally around the country. Does that strike you as without patriotism? I don't know. Is patriotism a force for good? Evil? How do you see that?
I think good produces a good type of patriotism. So I went through the same cycle, and I'll talk about metrics too. The reason I put metrics in there is, every 6 months or 12 months, I'm going to update the metrics so that everybody could look at those objective numbers and see, are we improving or are we deteriorating? And I think if the politicians, the people in government, were held accountable for those numbers so that you can objectively see, is education, is the wealth gap rising, is there greater productivity? These are measurable things. You can then see, and they're not just measurable about outcomes, they're measurable about health. if you have a better healthy income statement balance sheet, you are healthier financially and so on. So those metrics we'll put out. But yeah, no, I saw the cycle. United States world order began in 1945. I was born in 1949, and I benefited from it. And it was not just an American perspective, that American dream. It was a world dream. It was the only country in the world where there was really a sense of equal opportunity. I was very lucky. I had two parents who cared for me. They loved me, gave me good guidance. I went to all public schools, and I came out to a world of equal opportunity. That's all I needed. Okay, that's all almost everybody should get. Why shouldn't everybody get that? And it was a place where anybody from all over the world could come, and you were not. You could be a citizen, and it was the only place in the world where you could really be part of that and not considered an outsider. So all that immigration brought the best talent, and we operated in a place where there was rule of law, and everybody respected the law. There were property protections, and you could make a life that was the type of life that you've had, the type of life that I've had, where we're free to speak, free to do those things, to have opportunity, and so on, free to invent, free to do what you're doing and I'm doing, and that is the American dream. And that was a beacon for people all around the world. That was what the United States was, and so on. And that is good. That is good. Okay. Now we have something different. And we have a dynamic which is going on because we abused that, because we had to spend so much money, because we became decadent in terms of overspending on some things and undertaking care of other things and so on. And now there's a fight, and that becomes that dynamic. So yes, if we could recreate the realization of what that was, what is the American dream, what is fair, how does that work, and rekindle that, then that has a tremendous power in being able to bring that back. But the dynamic of history shows that it's more likely that it goes the other way. But yes, if we rekindle that, the idea of heroes, we don't have any heroes. Why don't we have any heroes? Because we're tearing people down. Heroes are role models, people who we admire. There are many people I admire, and I've seen in my lifetime. We should see more of those role models as examples of how to be. But yes, we're missing that. We've become largely a decadent society that's at each other's throats, and we're in trouble.
Yeah, we're in trouble. Innovation. Speaking of, there's like almost a distrust now of people that strive for success. There's a distrust of science to some extent. There's, I feel like, and maybe I'm crazy because the stats will bear this out, but it feels like we used to be the place everybody would want to come. If you had that entrepreneurial dream and you wanted to build something and you wanted to generate wealth and innovate something, this is where you would come. And then I look at somebody like Elon Musk, who honestly, man, just seems like an alien. I don't know how he's pulled off everything that he's pulled off. It's absolutely bananas. And yet there are people who just can't have it. They can't have the level of success that he's had and aren't necessarily even looking at it from the lens of the innovations that he's created. Do you think that that's a predictable change in attitude that people have and they lose the desire for innovation? Is it just being decadent, or is there a rebellion against education? I don't know. I was so shocked to hear that there are people that aren't inspired by what he's doing, but instead are like just opposed.
I think everybody's got these opinions and they're so critical, and not, if everybody could just take care of themselves. It's like start with oneself. The aspiration, and I think the reality should be to be self-sufficient plus. Okay, here's my view. Success doesn't have to be making the most money or the most contribution. Success for a successful life is that you have the type of life that you want for you, but you earn more than you spend, so that you're self-sufficient. And if every individual could do that, you would have self-accountability and a successful society. And so it's not a bad thing. It's a good thing when people produce things that others want. And they end up making, in many cases, billions of dollars. It doesn't have to be the billions of dollars to be successful, but let's not resent that. Like I think when we think about the prejudice of either against the billionaire or against the poor person, that prejudice, I think supposing we eliminated the billionaires. Most of the billionaires, one thing is inheriting the billions, another thing is creating the billions. Most of that comes from coming up with something that people wanted, and then people spent a lot of money on that thing. And I think if you were to take those items that they created and you say, the society's not going to have those items, would you have rather not had them? I think it's all a matter of stop the fighting, be productive, have the life that you want. Not all this fighting and criticism that is going to tear down each other.
Yeah, one thing that I've heard you talk about that I really resonate with is the idea of leading with understanding. Listen first, try to figure people out. I know your stance on China has become controversial, I guess, but when I hear what you say, it's basically understand them. Even if they end up becoming our enemy, to understand them would be incredibly important. Is that a life strategy you have of trying to understand people? Are you somebody who sees yourself as somebody bringing people together? What do you think is that importance in terms of understanding others?
Well, just from really just seeking understanding is a very practical thing, and it's interesting as could be. And then it has a lot of really good results, because with that understanding, you can understand how to trade things to have win-win relationships rather than lose-lose relationships. So yeah, I think that most people are operating in their perspective of what's good for them. And then the best are operating with the concept of win-win relationships, that they understand that if I have a win-win relationship, I can, like I know the principle 1 and 1 equals 3. If there are two of you and you can trade things and you can help each other, that's a win-win relationship, and that is the best. But in order to do that efficiently, you have to understand their perspective, and also their perspective is not as much like a characterization of good and evil. It is them doing what they believe is in their interest. Now that may do you harm, and you might call that evil, but it's almost that back and forth. So when you have that open-mindedness, so you can understanding somebody else's perspective is not the same as believing that what they're doing is right. you may have a choice. But if you have somebody who has a different religion or a different way of doing things, at least have an understanding of that, to see it through their eyes, right? You can reject it. You could say, I don't want it, right? But even then, you have the capacity to deal with it in a much more informed way than if you don't understand it. So understanding, I think, is important. And then, of course, the world works in a way where it's the reality that they will move in a certain way, and then you move in a certain way in those interactions. And if you don't have that understanding of the reasons why, you're never going to be able to play the game, whether that's playing a game against them or playing a game with them to try to produce the best possible outcome. You're never going to be able to do that well. And so, yes, I see this tremendous misunderstanding because there's a tendency to demonize the other side. Okay. And that's, and so it becomes a distorted reality in which there's an inclination to go fight, and there's misunderstandings. Well, even if you're going to go fight, make sure you've got understanding.
Yeah. So when I was introduced to Taoism when I was probably 16. And so that gave me, when I was young, I really had an obsession with China and Chinese philosophy. And I studied Lao Tzu, Zhuangzi, and just really became enamored with the East and Eastern thought. And so for me, it's been almost strange to watch China take on a very different tenor in terms of the way the US perceives China, right? To see this stuff escalating and getting darker and darker. What I find interesting is, like you said, to understand them is not the same as to agree with them. And I think that that's very important. First of all, I'm not a scholar on it, so I don't know. But when I take that, what you're saying, and I apply it to the US, okay, lead with understanding, lead with trying to figure out where they're coming from, lead with recognizing that if you don't, and you encamp into this us versus them, it is inevitable that you conflict. And so when I look into the future, I have, whether I like China or think they're out of their minds, I have no interest in going to war with them. Just the loss of life is just too catastrophic to even contemplate. So I start thinking, okay, like, how do we bring these together? And you had a key insight in the book that I thought was really powerful. And you said, look, no matter what you think about China, you have to understand that they believe they're doing what is right. You're not going to convince them to do it the American way any more than they're going to be able to convince us to do it the Chinese way. And I found that insight very compelling, because you go into this ideological battle when you think, oh, we can convince them, we can win. When you think that you can draw them over to your side, that's one thing. But if you can't, then it becomes a very different game of, okay, how do we negotiate this relationship if I'm not going to be able to convince them? And so in the book, you bring up another idea, which is the idea of dialecticals, two opposing forces coming together, and in the friction is the superior answer. So I know that China looks at themselves that way, and they use dialectics. I think that the US, given the conflict between the left and the right, has to start doing the same thing of saying, hey, we actually need to value this friction. That it's not, I'm not trying to convince somebody on the other side to think like I think. I'm trying not to even think of myself as having a side, if I'm completely honest. But I understand that they're personality types. They see the world differently. They're never going to persuade each other. But hopefully we can let go of some of that, the warfare mentality, and bring people back to a table of compromise. Am I understanding that the dialectical nature of those two opposing forces correctly? And do you think that that is a useful way to, instead of trying to get the other side to agree, to find the strength in that push-pull?
Yes. And that, yes, totally. Unequivocally. And in addition, to understand the cost of lose-lose, and additionally, the issue of sovereignty. The invention of countries, which came in the late 17th century after the 30 Years' War, was one of the great inventions. They were not countries. There were no borders. Amazing thing. There were no countries, there were no borders. The way it worked is most countries were run by families because they were royal families. And there was a constant fighting, like I want to go take more, or they would take more, and there was constant fighting. And they had a war, 30 Years' War, they called it. And at the end of this 30 Years' War, they were so sick of war that they came up with this idea of countries, so countries that had a border. And that you would determine, those inside those countries would determine what went on in those countries. Back then they fought whether it should be Catholicism or Protestantism, or whether it was the Pope, or whether it was, they fought about a lot of things. But when they had that, they said, okay, that's what we're going to do, is we're going to do it within borders. So I think that's interesting. So the idea is that by and large, if you have a domain and it's in your border, that you have control of that. That's one element. Then there's win-win relationships versus lose-lose relationships, and the things that you were talking about. The dialectic forces one to recognize the pros and the cons and to try to get into an equilibrium level. I think that all of that is right. None of these things works perfectly. So the question of, what is it? Can anything go on within those borders and it's okay? Maybe there are common rules that the system as a whole agrees can or can't or something. But those kinds of rules, I think, are important. So as we go down the checklist, live and let live. Win-win is better than lose-lose. Understand each other, where they're coming from, so that you can do good trades, and don't misunderstand. Lose-lose wars are terrible types of things. That doesn't mean there are not things worth fighting for. But if you operate within the parameters of borders, and then it's largely your own business. And then we come to ourselves. And the most important thing, whether there's international or domestic issues, is be strong. It's like be healthy. If you're strong and healthy, you don't have to worry domestically, and you don't have to worry internationally. And it's just basic things of what's strong and healthy. You earn more than you spend. You're good with each other. You educate your population. You're productive. Those are basics. Be that. Take responsibility for yourself doing that. The United States should take responsibility for itself doing that, like every other country can. And if it does that, it will be strong, and it'll be healthy, and it'll be fine.
Yeah, Ray. I really want to be in a positive place about where all this is going. I'm such an optimistic person by nature, but there's something about watching that breakdown that you did of the last 500 years. I think I told you this when we were doing the pre-call. I couldn't listen to the book first thing in the morning, because it was like putting me in this really almost stressed out state of like, man, go ahead.
I have a principle.
Please.
If you worry, you don't have to worry. And if you don't worry, you need to worry. Because the thing that I could give you is this worry about realistic things that you could worry about. That's what I want to give the people. That's why I did the video. By the way, the video, you can skip the whole book. The video is an animated video. 10 million people have watched it in no time. It's something that's very digestible, and it carries the picture. Because if you worry, then you'll do something. to prevent those worries. If you worry about going to World War II, if you worry about those, and if we could get enough people who believe in these things, then we will have a different choice, right? There'll be less likelihood of us fighting with each other and doing each other harm, and instead doing more good things that'll raise ourselves and raise our living standards because we have the resources to be doing those things. So the greatest danger for most people is failing to look at the things that could be harmful to them, because they don't like to look at them. It's like some people would rather not know that they have a serious disease or something. Okay, look at it, deal with it. And then you're most likely to be able to deal with it effectively and minimize problems or take advantage of opportunities. There's a lot of potential here for us to do amazing things, technologies, the ability to think. I mean, we've seen amazingly wonderful things. The capacity for, you have a pandemic and we come up with vaccines, the capacity to get around the fact that we can't get out of our houses. All of that could all raise living standards if we could all work well together.
Yeah, at the end of the book, you said something that was really interesting along these lines of, I build my portfolios from, I look at the absolute worst case scenario, the thing that just is I can't let that happen under any circumstance. And so I address that. And so if you said, I even have an end of the world portfolio strategy, and that you allocate resources to these different buckets to make sure, well, if the world completely, collapsed, and I don't know what you deem the end of the world, but that's a pretty bold title. But that you look at those things. You said, people assume that when I look at those, that it actually makes me pessimistic. But in fact, the exact opposite is true. It's liberating to know that I have thought through those scenarios. I have taken action. And I will say that's another thing. People may look, but if they don't do anything, like I really wanted to get you back on the show because when I read your book, I was like, Ray, I was actually nervous coming into this interview. I'm like, this may be the most consequential interview I've ever done, because if people take away from this, that we're really at a tipping point moment, and that the way that we all act in these, coming months and years could determine the world order, whether we maintain stability or whether we go into a period of such tumultuous chaos that the loss of life is just unimaginable. And by looking at that and saying, okay, that's real, and now what do we do about it? It's a real possibility. 20 years ago, I would never have bought into it. I'd be like, oh, he's an alarmist. But it really feels real to me now. And so I can't encourage people to skip the book, because I think the book has lots of additional information. The video is phenomenal. It's probably the right place to start. But then to read the book and to get that information, to really grow to understand exactly how these loops repeat, will give you an understanding of what we need to do to forestall that. And the things are simple, but they are very difficult to do. So our goal is to be healthy and strong. So spend less than you make, make sure that you are presenting yourself well on the world stage and getting along well with each other. But that means we have to race back to the middle. And that was like, I had this sense of like, what I always told people was fill your heart with love. Whenever you're going into it, and it feels stupid, feels dumb when I say it. But when I think about somebody that I disagree with or whatever, that it's the dialectic approach of, I need to learn from this friction. Rather than trying to convince them, I need to learn from their friction. I need to have respect for them as a human. So I need to want to come to a place where we can compromise, and them not try to, drag me over their side, me not try to drag them over my side. Or again, I try not to have a side, but just like, what works? What are the metrics? Look at the metrics. Is this actually working? If it's not, adjust. If it is, pour gas on it, right? So, but figuring that out, coming back to the middle and actually taking action on the stuff that you lay out, it's incredible. I think that you've done the world a tremendous service by taking these however many years you're going to do it and giving us all these incredible books and talks and videos that outline all the things you've learned. So one, just thank you. And then two, where can people engage with this, with all the material that you're putting together?
Well, so first, you're welcome. And I want to emphasize that what I did in the book was to describe like maybe what we could collectively do, but also what individuals can do if we don't collectively do the right thing, because either can happen. And that's why, in a sense, quote, like what I call the end of the world portfolio is to know that if this, no matter what happened, if there was a civil war or there was anywhere or whatever, that I have my protection in a certain amount, and I've taken that off the table. And then once that's off the table, there's relief. There's a lot less worry. And then you can be more aggressive doing the things that you'd ordinarily do with the other part of the portfolio. Even thinking that way creates great relief. It's like having an insurance policy and so on. So, but I think the actions that you described, to get informed one way or another, the book is the best because it's the most complete and it brings you through it. But the video is really easily digestible. As I say, 10 million people in 6 weeks, and it's a hot video. Many people see the video and then they go to the book, whatever way that I can pass it along. And yes, it's my pleasure. I'm 72 years old and I'm in a phase of my life where the main thing I want to do is to pass along what I have that's going to help others, particularly beyond me. So let me thank you for being a partner and being able to pass this along to your listeners.
Anytime, Ray. Anytime. Every time has been an extraordinary gift. So I thank you.
Okie darky. That is going to conclude today. At least this part of today. We're gonna move into some actual, just some gaming and stuff like that while I work on other things on the side. Got to cut up some video, and make that into other content, which we'll post on our socials and whatnot. But yeah, started off as we were trying to do Twitter Spaces. Ran into some issues with that. I'll have to see what I can do to fix that and fix the audio lines there, because it was really an audio line issue. But I might be able to fix it. So I'll see what I can do as far as that goes. Maybe I need to change it to like desktop audio or something. Yeah, it's gonna take some tinkering. But thanks for hanging out with us. If you're hanging out, I'm gonna close stream for now. Come back up and we'll be gaming. See you guys in the next one.